Most people enter trading believing they're stepping into a world of opportunity. They imagine independence, freedom, unlimited financial upside. They believe if they study hard enough, practice long enough, control emotions well enough, success will eventually become inevitable. But trading doesn't work like that. Trading isn't just a profession, it's a psychological battlefield. And every trader who survives long enough experiences something few people talk about, a series of internal deaths. Not physical deaths, not financial ruin. Although that sometimes happens too. I'm talking about the destruction of beliefs, the collapse of identity, the slow dismantling of everything you thought success required. Because the market doesn't just test your strategy. It tests your ego, your patience, your emotional stability, your sense of control. And if you stay in this game long enough, you'll go through 5 distinct psychological transformations. 5 stages that every serious trader must survive. Each one strips away illusions. Each one forces rebirth. And most traders never make it past stage 3. Stage 1, the death of innocence. Every trader begins with innocence. You believe markets are logical. You believe effort guarantees results. You assume fairness exists, that good analysis equals good outcomes. You spend hours studying charts. You learn indicators. You build strategies, and when your first trades win, it feels like confirmation. You feel intelligent, capable, in control. Then the market introduces you to reality. Your perfect setup fails. Your analysis is flawless. Your timing is correct. Everything aligns. And the trade still loses. At first, you're treated like an anomaly. You adjust your indicators. You tweak your entries. You search for better confirmation signals. But losses continue. And eventually, the realization arrives. The market is not fair. It doesn't reward effort. It doesn't care about preparation. It doesn't respect logic the way you expect it to. Price moves based on probabilities, not guarantees. And probabilities include failure. This realization kills your innocence. You stop believing that hard work alone produces results. You begin understanding that uncertainty is permanent. This is the first emotional fracture. Some traders quit here because accepting randomness feels like admitting powerlessness. But traders who survive begin learning something deeper. You cannot control outcomes. You can only control decisions. Stage 2, the death of discipline after losing innocence. Traders swing in the opposite direction. They become obsessed with discipline. Rules become religion. You create strict trading plans, exact entry criteria, rigid stop-loss placement, mechanical execution. You believe if you remove emotion completely, success becomes automatic. And for a while, this works. Discipline creates stability. Losses shrink, consistency improves. But eventually, a new problem appears. Markets evolve. Volatility shifts. Liquidity changes. Behavior patterns transform, and rigid rules that once protected you begin limiting you. You notice setups that don't fit your rules, but still work. You see market conditions changing faster than your strategy can adapt, and following discipline blindly begins causing losses. This creates internal conflict, because discipline was supposed to be the solution. You feel trapped between 2 fears. Breaking rules feels dangerous. Following rules feels suffocating. This is when traders discover a painful truth. Discipline without adaptability becomes fragility. Markets reward structured flexibility, not chaos, not rigidity. Structure must exist, but it must breathe. The death of discipline isn't about abandoning rules. It's about evolving them. You stop treating strategies like law and start treating them like frameworks. This transition is terrifying because flexibility requires judgment, and judgment requires accepting responsibility. There's no longer a rule book to hide behind. Stage 3, the death of certainty. This is where most traders collapse. By now, you've accepted randomness. You've learned structured flexibility. So naturally, you search for certainty somewhere else. Usually through deeper analysis, you study market structure, order flow, macroeconomics, sentiment data, advanced statistical modeling. You believe if you gather enough information, uncertainty disappears, and your analysis becomes incredibly sophisticated. You start predicting moves accurately. Sometimes, but then something devastating happens. Markets ignore perfect analysis. You identify major support levels. Price crashes through them. You predict macro trends. News events reverse them instantly. You develop complex models and watch them fail during unexpected volatility spikes. And, eventually, you confront the most uncomfortable realization in trading. No level of knowledge eliminates uncertainty. The market is a dynamic system. Too many participants, too many variables, too many hidden influences. Certainty is an illusion. This realization creates existential frustration because traders are conditioned to believe knowledge equals control. But in trading, knowledge only improves probability, never guarantees outcome. Surviving this stage requires abandoning the need to be right. You stop measuring success by prediction accuracy. You start measuring success by execution quality. This is where traders transform from analysts into risk managers, and it changes everything. Stage 4, the death of identity. At some point, trading stops being something you do and starts becoming who you are. Your self-worth connects to performance. Winning days feel like personal validation. Losing days feel like personal failure. You begin introducing yourself as a trader, thinking like a trader, judging yourself through profit and loss. And this identity becomes dangerous because markets are volatile, and tying identity to volatile outcomes creates emotional instability. Losses start feeling like character flaws. Winning streaks create ego inflation. You begin forcing trades to maintain self-image. You overtrade to prove competence. You avoid closing losing trades because accepting them feels like admitting weakness. And eventually, trading consumes you. Your mood depends on charts. Your confidence depends on account balance. Your decisions depend on ego preservation. This stage destroys countless talented traders because they stop trading objectively. They start trading emotionally, even when they believe they're being logical. The death of identity happens when you separate self-worth from performance. You stop being a trader. You become a person who trades. This distinction sounds small, but it's revolutionary. Trading becomes an activity, not validation. Losses stop defining you. Wins stop inflating you. And emotional stability begins emerging. Stage 5, the death of attachment. This is the final transformation, and the most misunderstood. At this stage, traders often develop strong strategies. Risk management becomes automatic. Emotional control improves dramatically. But one final obstacle remains: attachment to outcomes. You still secretly want trades to win. You still feel subtle disappointment during losses. You still hope for validation through profitability. And attachment creates tension. It creates hesitation during execution, fear during drawdowns, greed during winning streaks. The final psychological death occurs when outcome attachment dissolves. You begin treating trades as experiments. Each trade becomes data, not judgment. Wins and losses become informational feedback. You execute setups with identical emotional neutrality. You follow risk parameters without hesitation. You close trades without regret or celebration. This doesn't mean you stop caring about money. It means money stops controlling your emotional state. You shift from outcome-focused thinking to process-focused thinking. And, paradoxically, this is when consistency often emerges, because emotional interference disappears. The rebirth. What survives after all 5 deaths after these 5 transformations? Something unexpected happens. You don't become fearless. You don't become emotionless. You become stable. You develop patience that Dosen DeFeel foresaid. You execute trades without internal conflict. You accept uncertainty without anxiety. You detach from outcomes without losing motivation. and trading begins feeling quieter, less dramatic, less stressful, less chaotic. Ironically, many traders expect success to feel euphoric, but long-term success in trading often feels calm, almost boring, because chaos has been replaced by clarity. Why most traders never reach this point? Most traders quit during stage 1. When innocence collapses, others quit during stage 2. When discipline becomes confusing, many collapse during stage 3. When certainty disappears, stage 4 traps ego-driven traders permanently, and stage 5 requires emotional maturity that few people developed quickly. The market doesn't reward intelligence alone. It rewards psychological evolution. The truth about trading: nobody tells you trading is not about mastering charts. It's about mastering yourself. Every loss is information. Every drawdown is feedback. Every emotional reaction reveals internal weaknesses. The market acts like a mirror. It reflects impatience, fear, overconfidence, insecurity. And the traders who survive are not the smartest. They're the most adaptable internally. Finamasaje. The question every trader must answer if you stay in trading long enough. You will lose money. You will doubt yourself. You will question your ability. You will experience emotional exhaustion. These experiences are not signs of failure. They are invitations to transformation. The real question isn't, can you beat the market? The real question is, can you survive becoming someone capable of trading the market? Because trading success isn't built through strategy alone. It's built through psychological reconstruction. And reconstruction always requires destruction first. The 5 stages of trader death are not curses. They are initiation. Each stage removes illusion. Each stage strengthens awareness. Each stage prepares you for the next level of clarity. And if you endure all 5, you don't just become a better trader. You become a more disciplined thinker, a calmer decision maker, a person capable of functioning effectively under uncertainty, which is a skill far more valuable than trading itself. If you're currently in one of these stages, you're not broken, you're evolving. And evolution in trading is painful, but necessary.